mortgage products. So today I'm going to go through a lot of the mortgage products that you're probably unfamiliar with. So buy for university. This is a mortgage that you can get if you have a young person going to university. So instead of leaving university with debt, they could actually leave university with a property. Joint borrower, sole proprietor. Fantastic for boosting your affordability if you're a young couple and you have a parent who can help you purchase the property by adding their income to the purchase. Residential interest only. Most people know that you can do interest only on a buy to let property, but some people don't realize that you can do interest only on a residential property. Specialist mortgages. So if you have credit issues, if you've missed payments, have CCJs, defaults, you may have ruled yourself out and thought you can't get a mortgage, but you actually can. Consumer buy to let. So a consumer buy to let mortgage is a mortgage usually used when you have a couple who both have their own individual properties. They come together, get married, and decide that they're going to let one of the properties out. So that would be a consumer buy to let mortgage. HELOC, so home equity line of credit, an exciting product that a lot of people don't know about, don't think is in the UK, but is actually available to them. Expat mortgages. Maybe you have a property, you've moved away from the UK and you're living in another country, and you decide that you either need to remortgage or you want to buy another property in the UK while living abroad. Expat mortgages are fantastic. There are lots of lenders that do them, but the criteria can be a bit tricky. So you want to make sure that you speak to a mortgage broker. Skilled worker visas. Skilled worker visas. A lot of people in the skilled worker community are told you can't get a mortgage in the UK because you don't have a UK passport or indefinite leave to remain. It's not true. I do mortgages for skilled worker visa holders pretty much every day. There are great products out there. So make sure you contact me that I can help you if you have a skilled worker visa. And self-employed. There's lots of myths around getting a mortgage if you are self-employed, particularly if you don't have 3 years worth of SA 302. I can help with all of those things. I'm going to talk through each of them in a level of detail, and make sure you watch all the way to the end because I talk through my £0 broker fee offer. So £0 broker fee offer. So if we don't get you a mortgage offer, you don't pay a broker fee. Buy for university. This is a product that a lot of mortgage brokers don't know about, a lot of consumers don't know about, and it's a very exciting product. It can help break the myth about generation rent and how difficult it is for young people to get mortgages. The Buy for University product allows parents to support their kids in buying a property as they are in university. It's cheaper than renting and can be an investment. So when they finish university, they actually have a product that they can switch over into a buy-to-let mortgage. The child can be the co-owner and the tenant. So in most cases, the child does have to reside in the property. They can rent out some of the rooms. And the mortgage structure is different than a standard buy-to-let. So some of the criteria is easier. Some of the criteria is a little bit harder. So the student must live in the property. So you could get a 3-bedroom house. The student lives in 1 bedroom and rents out the other 2. Typically, the parents go on the mortgage as a joint borrower, sole proprietor. So the parents are on the mortgage, but they don't necessarily own the property as far as the deeds are concerned. Standard rental income may not apply. So the lender's going to look at what you could reasonably rent out the rooms for. And you are, in most cases, going to need an AST on the property that also names the young person. Deposits are a lot higher, and the deposit structure is a lot different than standard deposits. Sometimes it will require a second charge on the parent's home. So this product is really only suitable if you have a parent or parents who own their own property, have a very low mortgage outstanding on it, and are able to do a second charge on their property. The Buy for University mortgage is a niche product, and a lot of mortgage brokers don't know about it, and many lenders don't offer it. But if this is a good fit for you, make sure you speak to your mortgage broker. If you don't have one, contact me. A home equity line of credit, a HELOC. A lot of influencers online from America talk about this HELOC. Many people in the UK don't realize that HELOC loans are available in the UK. So a HELOC is kind of like using the equity in your home like a credit card. It's a flexible credit facility secured on your home. So it is a second charge on your home. You borrow and repay and reborrow as needed. It's a revolving line of credit, unlike a personal loan where you would get a lump sum, pay a fixed amount every month. This gives you a revolving line of credit that you can use, repay, and you only pay interest on the amount that you use. It's great for ongoing projects. I have a whole video about HELOC loans. Make sure you check that out. Make sure you like, subscribe, and make sure that you comment on this video. So some of the criteria for a home equity line of credit or HELOC. You need to have equity in your property. So this product is suitable in most cases for older people who have 40% or more equity in their home. They have low outgoings. And a key thing is you must have good credit. This is not a product that is suitable if you have bad credit. Interest rates can be variable. So like a credit card, the interest rates can vary, and it's not widely available in the UK, but it is available in the UK. It's somewhat of a complex product, so make sure you're dealing with a mortgage broker who understands HELOCs, has explored other opportunities, and that you understand that failure to make repayments on your HELOC or even on your mortgage could result in your home being repossessed. As a reminder, I don't make these videos to give financial, legal, or tax advice, or to replace speaking to a qualified professional who understands your circumstances. Consumer buy to let. What is a consumer buy to let? Most people have never heard of it. So a consumer buy to let is for landlords who didn't choose to become landlords. So usually it's a couple, both of them own a home, they come together, they get married, they decide they're going to let one of the properties out. It's not a standard buy to let, because a standard buy to let would be a buy to let that is purchased with the view of renting out. This is a property that you used to live in and you now want to rent out. So there's more consumer protection built in than a standard buy-to-let mortgage. Some of the criteria for a consumer buy-to-let. Property must not be purchased purely as an investment. So you probably already had the property. Maybe you inherited the property and you now need a mortgage on it to rent it out. The borrower must not be a professional landlord. This is not a property portfolio product. It's an accidental landlord, someone who had a property and now needs to rent it out. Affordability checked, more like a residential mortgage. So unlike a standard buy-to-let mortgage, where when they're doing the affordability checks, they look at how much rent that property can bring in versus what the mortgage is. With a consumer buy-to-let, it's viewed more like a residential property. So there will be some affordability hurdles to get over. Make sure you speak to your mortgage broker and make sure you, if you need it, you get independent legal advice when doing any complex mortgage or financial item. The hidden world of mortgages. Roughly 1 in 5 UK mortgage approvals come from non-standard products, yet banks rarely advertise them and most people just don't understand them. Brokers know where to find these hidden options, and choosing the right one for you could save thousands or even make otherwise impossible purchases achievable, which is why it's essential that you speak with me 6 months before you think you're ready. And here's that offer that I spoke to you about. And it's not a one-time offer. It's not a promotion. It's how we work every day. So we charge you for results. We don't make promises and ask you to pay in advance. The first thing that we'll do for you is a free mortgage capacity report. This is where we'll look at your income, your outgoing, your status, your passport, your credit history, etc. And we'll give you an assessment on how much you should be able to borrow. This is not a credit check and it's not a mortgage application. It's just a conversation where we can answer your questions and give you the answers that you need. There's no broker fee if we don't get you a mortgage. So the way that we work, we do the work first. Once we get to a point where you are happy with the product that we found for you and you decide that you want to move forward, we'll get you an agreement in principle. We'll then charge you the application fee after we've done the work for the agreement in principle. We'll provide full support and guidance throughout the whole process, even after you get the keys to your new property. We're fast and reliable, and you're paying for results. My name is Anthony Lindsay, and if you don't have a mortgage broker and you don't want to take the risk of paying someone in advance for results that you might never get, make sure that you reach out to me. I make these videos to improve your financial literacy. They're not here to give financial or legal advice, and they're not here to give tax advice. But I have written a book called A Mortgage is a Really Big Loan. It's available on Amazon. It's about more than mortgages, it's about finance. So if you're new to the UK or you're a young person and you want to make sure that you have a solid foundation that you can purchase a property in the future, make sure you check it out. It makes a great gift and it's an easy read. I haven't written it with a lot of technical terms in it. I've written it in everyday language based on my 30 years of experience in finance.